Imagine all of the things you could buy for $5 in the real world. A 6-inch ham and cheese sub with extra pickles, maybe a bus ticket into the city, or just to the next stop. But in the world of stocks and shares, $5 can net you some pretty good returns if you play your cards right. Now, it is true that small cap stocks can be extremely volatile, and I'm not for the faint of heart, but you're never going to make a profit off buying a sandwich, right? First up, we have CBD company Charlotte's Web Holdings, ticker CWBHF. The company saw excellent gains in its direct-to-customer sales figures, reporting $15.6 million in sales in its recent quarterly report. Strong investment in marketing and social media programs saw a large increase in online traffic, ultimately leading to a 25% increase in customer acquisitions, a 77% conversion rate, and a 33.6% increase in net direct-to-consumer sales. At the start of 2020, Charlotte's Web were trading at $7 per share, but the pandemic severely affected its business-to-business operation, dropping its value to $2.82. But you know what they say, what goes down must come up. It's something like that, right? Whatever the saying, a return to normality for the economy on top of their acquisition of Abacus Health Products will see this company capture 33% of the CBD market share, bringing their stock back to and even beyond its original level. Definitely worth keeping an eye on. The next stock is a very shiny prospect indeed. We are of course talking about the Endeavour Silver Corp, ticker EXK, a precious metal mining company with a strong potential for growth. Like many companies, the pandemic has caused disruption to its mining capacity, resulting in a lower quarterly tonnage figure. But fear not, the company has some very exciting things on the horizon. 2 new mining locations in Mexico are showing a lot of promise, with expectations of the second mine in Terranera to produce 3 million troy ounces of silver and 30,000 troy ounces of gold annually. These kind of predictions make this stock a potential gold mine for investors. Next up, we have food delivery company Waiter Holdings, ticker WTRH. With the Zacks ranking of number 2 and 114% growth in earnings per share over the last year, the company looks like a great prospect going into 2021. In December 2020, the stock saw growth of 55%. 14% come of that in 2 days. 2 days. The upward trajectory could continue, so we think it's a stock worth considering. Imagine being a company that produces thermal imaging technologies at a time where the most effective way to tell if someone has the coronavirus is by their temperature. Well, LightPath Technologies, ticker LPTH, seem to have hit the jackpot on this one. As manufacturers of optical components, lenses, and thermal imaging equipment, the company ticks all of the boxes when it comes to the future of mass diagnosis. Their only limitation lies with their manufacturing and production capacity, which can take a lot of time, but their CEO Sam Rubin is confident about the future.
A few years ago, we switched our model with the acquisition of ISP Optics and with the shift towards this infrared imaging to making our own glass. And that has really turned out to be extremely powerful now, because as demand was spiking, we could very quickly scale up production of glass and, one day be making 10 kilos of glass a day, the next day be making 100 kilos a day. So their flexibility and our ability to scale to adjust to customer needs and demands is considerably different, given that we're doing everything from taking the powder, making the glass, all the way to the end where we have a final lens assembly that the customer just takes and plugs onto his camera.
Mr. Rubin and LightPath definitely make our list. Our next 3 places are awarded to 3 very promising looking pharma companies. Just to be clear, that's the doctor ones, not the animal ones. The first of which has recently obtained intellectual property rights for the cancer treatment drug Prexigebersen. Biopath Holdings, ticker BPTH, acquired the rights from the US government in October, which now covers the use of the drug in combination with other frontline therapies. Their CEO, Peter Nielsen, said, "This further strengthens our intellectual property portfolio and complements already granted patents. Our growing patent estate continues to be a valuable asset for Biopath. The amassing of an increasing number of medical-based patents will definitely see the company's stock rise in the future." Alongside cancer, incidences of PTSD are rising sharply in the Western world, and Aptonix, ticker APTX, may have the solution. They have been working on the development of a PTSD treatment by the name of NYX783, and it has shown positive signs early on. A 153-patient study on the drug found statistically significant and clinically meaningful efficacy results, with a favourable adverse event and tolerability profile. If they get this treatment right, it could mean very big things for the price of their stock. The last of our biotech companies goes by the name of Biotech Pharma plc, ticker MTPH. This company is developing a treatment for the condition diffuse intrinsic pontine glioma, and for all of us non-medical folk, that's a type of brain tumour. Phase 1 trials took place in October 19 and proved successful, with Phase 2 trials now in the pipeline. If the results are positive, the company could see really strong gains in its share price. If you want to trade the best stocks under $5, or any other stocks online with zero commission and no deposit minimums, then Webull is the platform for you. They offer a number of trading options, account types, and in-depth stock analysis tools to help you become a better investor. Plus, you get free shares of stocks like Apple or Tesla just for joining. Check out the link in the description for more details, and don't forget to claim your free stocks when you sign up. Next, we're jumping into the world of traditional tech, and first up we have a digital media company that focuses on the acquisition, distribution and monetization of live music, internet radio and podcasts, among many other things. LiveX Live, ticker LIVX, has had a good past year thanks to its focus on streaming music. Given that live in-person music has tanked recently, their focus on streaming live music has put them in a unique niche, and their share price is expected to continue to rise as more people look for ways to experience live music via streaming services. One of the OGs in the tech space, Nokia, ticker NOK, have made it into our list with some impressive recent credentials. We all remember the legendary 3310 mobile and the impact it had on society. But now the company is moving into the high-speed internet space. After Chinese firm Huawei's ongoing feud with the US, Nokia secured a contract to build Belgium's brand new 5G network with the help of Orange and Proximus. This could be the start of big things once again for Nokia, so keep an eye on this stock. Next on our list is financial tech company Mogo Inc., ticker MOGO, who offer digital financial services to consumers. Boasting features such as credit report monitoring, identity fraud protection, and digital spending options along with digital mortgages, the company has seen good recent growth, evident in this year's quarterly reports. They did have a significant drop in value back in March, down to 80 cents a share, but have since clawed it back up to $2.98 and are now seeing revenues in the region of $10 million, with a cash flow of $6.5 million. In early December, the company saw their Bitcoin transaction volume spike by 135%, and also acquired the company Carter Holdings, which to us shows a very promising future. Let's travel across the globe for a moment to Asia, where there are some great options, not just for food, but I sure do love those noodles, for stocks under $5 too. The first company worth putting the spotlight on is Lianlo Smart Ltd, ticker LLIT. In October, the company announced a merger between themselves and a technology and electronics e-commerce marketplace by the name of Newegg. The transition will see stockholders of Newegg become the majority shareholders of Lianlo and allow for the next stage of growth for the duo in the public domain. Newegg are no spring chickens and have been a go-to site for technology enthusiasts for decades, so this could be a very lucrative investment. This next company is a real breath of fresh air. The Taiwan Liposome Company, ticker TLC, has created an inhalable COVID-19 treatment, which has been given the green light by Australian authorities to begin human trials. The Bellbury Human Research Ethics Committee approved the company's application to launch a Phase 1 clinical evaluation of TLC-19. The decision comes just days after Taiwan approved TLC's investigational new drug application for the compound. If the company is successful in its pursuit, the commercial prospects of such a project are huge, definitely something to bear in mind. Our final stock from the continent is a biotech company by the name of Synlogic, ticker SYBX. This company has won the hearts and minds of many hedge fund managers, featuring in several high-profile portfolios throughout 2020, as well as consistently ranking in the top 30 most popular stocks of the year. In early December, the company announced its entry into Phase 1 clinical trials for its SYN-B8802, a new drug meant to treat cases of enteric hyperoluria, an acquired metabolic disorder. This announcement saw a significant jump in share prices from sub $2 to over $2 in a single day. Another thing to acknowledge is the appointment of biotech giant Michael Hefferman to the board of directors. All of these factors in conjunction make Synlogic a great buy right now. The final two stocks on our list have one thing in common: high dividend yields. First, we have VOC Energy Trust, ticker VOC. The company just announced it will be distributing $1.455 million to its shareholders, yielding a whopping 5.82%, an incredible rate given the current low interest rate environment. It's certainly not every day you'll find stocks with that kind of dividend yield, and investors are flocking from far and wide to snap up a piece of this company. And our final stock to buy for under $5 right now is Global Self Storage Inc., ticker SELF. This company is a real estate investment trust that offer commercial and residential storage options, and like VOC, offer a very generous dividend at 26 cents per share. Exceptionally good return for a stock under $5. Despite the recent economic turmoil, the company have proved themselves to be a stable bet and could perhaps see more prosperity as a result of housing evictions and an increase in the need for storage solutions. Only time will tell, but this could be a very good option indeed. So that wraps up our list of the 15 best stocks for under $5 right now. Hopefully this will put you on the right path for investing in small cap stocks and bring lots of prosperity going into 2021. If you enjoyed this video, please don't forget to like and subscribe to the channel, and click the little bell to receive our notifications. Happy investing, and we'll see you in the next one.